Don't look at the stock market. Why would you look at the stock market? Do you just want to feel like you hate yourself? I don't know. Friday, October 7th, 11:01 a.m. Central, 12 p.m. Eastern, 9 a.m. Pacific. Why was that so hard? Hey, so the stock market's not doing very well right now, but it's okay. You're here with Farz and friends, right? We're going to talk about all things Tesla, Elon, Twitter, semi, blah, blah, blah. Welcome in my panelists today. We have the Borg Hand, Mr. Richard.
Good morning.
And Hans. Welcome in, y'all. Thank you for joining me today. How you guys feeling?
We're doing great.
I love how you said we.
Yeah.
You're like, just, bringing it up from the universe. We're great. We're doing great. We're doing great.
We being the Tesla community. We're doing great.
Yes.
I honestly thought about making a big old bag of popcorn and just eating popcorn today. I mean, the show this week, all the news, all the different stuff going on between Twitter and AI Day and the stock market and semis releasing and all of it. It's just been absolutely insane.
Yeah, absolutely wild. For those that are not looking at the stock market, I'll just pull this up for 30 seconds. Tesla's down 5%, down to 225. If I go back and I look at the rest of the market, it's not doing too hot either. We got the S&P down 2, Dow 160, NASDAQ 3. So everything sucks right now, but not absolutely everything, because we do have a lot of really cool stuff to talk about, like Hans said. So we were chatting before we went live as well. There's a few things we want to hit, but I'll let you guys take it. I mean, what do you guys? I know, Richard, you said Twitter might be a good topic of discussion to talk about, but we're also chatting about some comments around the semi and stuff. So
sure.
Maybe do you want to drive the discussion?
Sure. So, some of us Tesla people might be interested in the Twitter deal. So I read a bunch of information. I kind of want to, as best I can, clarify kind of in my mind what's going on. I'm going to try to do that. So yesterday, there was some discussion or information about the closing date being October 28th. And the way I see it is what happened was there were negotiations between Elon and Elon's counsel and the counsel for Twitter. And Elon apparently at some point in time sought a 30% discount on the price of the company. Mm-hmm. Twitter responded apparently by giving him something on the order of a 10 to 15% discount. He declined because they wanted to be unconditional. Elon wanted the deal to be still conditioned on the financing, that he would have to secure financing. And the Twitter board didn't want that. They wanted it unconditional. Basically, we'll give you a 15% discount, but you have to perform. He has not agreed to that. So what they did is Twitter believes, the Twitter board, and this is my speculation, but the Twitter believes that he's going to try to use the financing as an out to get out of the deal. They wanted to remove that as a contingency. That's why they agreed to give him a discount. That's why they didn't accept his deal, and that's why they're moving forward with the trial, theoretically. So what happened is the judge gave them till October 28th to reach a deal. And if a deal's not reached by that date, then she will set a date in November. So I think it was reported yesterday they had to reach a deal by October 28th. That's not correct. That's just when a trial date will be set, and they could still negotiate. But it certainly suggests that Elon wants to retain that financing contingency as a possible out. Now, the transaction itself and this legal proceeding is called an equitable proceeding, which means that Twitter, in this case, is trying to get fairness. They're trying to, and in this case, they're seeking specific performance. That's the remedy. And that means that the judge can force the deal to conclude. Most times, specific performance for most people are in real estate transactions. So maybe somebody who wants to buy a condo and the seller decides they don't want to sell it. The buyer can force the sale, and that's specific performance. And that's generally the most common place that it's done. In this case, there's more complexity, though, because if the judge if let's say this was an all-cash deal, the judge could order specific performance because she could order Elon to perform. But here, there's a financing contingency, and there's a bunch of lenders involved, and none of the lenders are parties to the action. So the judge has no authority over them, so the judge could not order the lenders to perform, which I think creates a real problem in the judge ordering specific performance. And on top of that, people have said, well, if Elon can show that the lenders aren't able to perform, that might be an out, which it might be. And that might just subject him to a $1 billion termination fee. But the way I see it is if Twitter board is seeking basically equity, and the judge concludes the value of Twitter has been basically decimated by the actions of Elon, perhaps she could order not specific performance of the transaction, but she could basically order him to pay the difference, the diminution in the value of Twitter. And that could be, that might be $20 billion, could be more, I don't know. But she has pretty wide latitude in what she can and cannot do. So if I were in Elon's camp, that would be my concern. I think unfortunately, it appears that the judge is biased, has some bias against Elon. At least that appears to be the reporting. And I saw yesterday that Twitter stated that they got a call from a lender, one of the lenders, and the lender had not even been contacted by Elon yet for a demand to perform, and had received no information. And this would have been one of those lenders who would be part of the deal. And I'm sure Twitter will provide that to the judge, that information to the judge. So the question will be, if the lenders can't perform because of Elon, I think the judge is going to hack them. If the lenders independently, because the market's terrible, because they're in a different position, if there's a business reason for them, if they have to bail out of the transaction, that might be a different consequence. But I think at this point in time, it's super unsettled. It's so unsettled that if you look at the price of Twitter, I think it's like under $49. So I think I kind of speculated like a 15% discount. I think that's kind of where we are right now at 40 or 10 to 15%. But there's enough uncertainty as to whether this deal is going to get done that we're still not at that 54.20 price, which is the transactional price. And to the extent that people were portraying this as settled and done, I think it's far from it.
So I guess one question that came up to my head is if Twitter agrees to move forward at 54.20, why would there be any quote unquote damages from hurting the stock where Elon would have to produce additional cash? Or did I misunderstand that point? Maybe walk. So let's say it does close at 54.20. Does Elon have to pay any additional money whatsoever?
No.
Okay. So walk me through again when Elon would need to pay additional, say that $20 billion number you threw out potentially. How would that arise again? Yeah.
If there's no close, and
if there's no close, okay.
Yeah,
got
and
it.
let's say the lenders bail on the transaction, and the judge concludes that the lenders bailed because Elon kind of made it so.
Okay.
And there's a diminution, and the judge wants to provide fairness to Twitter. That's kind of the only remedy that the judge would have, because if she just imposes a $1 billion fine on Elon's walked. He's got a bunch of cash to reinvest in Tesla and pump up his own stock, realistically, and he's free and clear. Twitter gets stuck with a company that's worth now half. So I don't think that would be a situation the judge would let stand.
But why would Twitter not?
And I should say one more thing. Delaware is specific. So Delaware is very favorable for corporate setup,
right?
For privacy reasons and for protecting corporations that are incorporated in Delaware. So the judge is in essence kind of carrying out that theme by trying to protect the interests of Twitter.
So why would Twitter not want to close if they're getting their original 5420 offer? Like in what
They do
realm would
want
that?
to close at 5420. They just don't believe that Elon is going to close at 5420. They think that he's going to use the contingency that their deal the only out that Elon has realistically to get out of the deal right now is if the lenders don't come through with the money, because the whole deal is contingent on that.
Yeah.
And so that's what Twitter is basically saying is we think that you're going to back out of this deal and you're going to use the lenders not coming through as the reason to back out of the deal. And so we want to protect our downside for that possibility.
I see.
And so that's why they're not moving forward.
Why would the lenders not come through under this scenario if they were originally committed at 5420? What has changed?
Well,
right?
The value of Twitter has changed. I mean, when they made this deal in April, I don't know what value of Twitter was in April.
But has it really materially? I mean, aren't they saying? Well, so we're saying that the market conditions can influence the lenders to say the original 5420 price was a good deal in April, but now in October with the quote unquote shit show that's happening in the markets and the way Twitter is valued, it doesn't make any sense for us to come forward at 5420. We can go at 45 or 44, whatever that number is, but 5420 is too rich, so we're backing out.
Well, it's essentially worth it. Yeah, they would say it's not worth it in this market. In this marketplace, it's not worth 5420.
So
the flip side is if the only thing that's keeping the price of Twitter at the level it is now is this, and if this deal goes south, this price is going to cut. I mean, I guess that stock will drop 50% in a day.
I guess so. What is? I guess my head goes to what is the likelihood that the funding actually does fall through? You know, like and say Elon has to sell additional shares. Like, what's the likelihood that he's not able to say there is like a few lenders or whatever whoever he's partnering to take the cash? Maybe he can just replace it with other people where he doesn't quote unquote have to sell more shares. Like, what's the likelihood of that?
I'm just saying I believe because I just kind of feels like the other times that he sold, there were a lot of there was murmurs out there. There was nothing concrete, but he ended up selling. To me, it feels like another one of those rounds. The other, I guess the number is confusing because I think the number of shares has decreased from the time the deal was done. So the total value of the deal is probably less, even at 5420. So I don't know what that gap is because it's probably less than what the gap was in the original transaction, but I don't know. But it feels like to me that it feels like he has some additional money to raise. And I would think that if you were an institutional investor that had I think Morgan Stanley is like one of his lenders, but I think he has a long-term relationship with Morgan Stanley, so I don't think they would bail on him. But there might be other smaller lenders who are, they themselves might be in a more precarious position because of the current economy 6 months later than when the deal was offered. And they may have their own specific reasons for needing not to go forward.
I got it. Hans, what kind of thoughts do you have about... sorry, Richard, I wasn't sure if you're done.
Oh, I was going to say one other thing. What mostly these banks get out of these deals is they make fees on the transaction. So maybe Morgan Stanley might make $1 billion on a big transaction, but then they're a lender, and they're behind equity and they're at risk. So
Got it. Go ahead, Hans.
So my thought, just like trying to understand the different actors, if I was Twitter and Elon was hesitant to say, yeah, I'm going to give up my last contingency, that I'm going to perform on this regardless, that would be quite a signal that, yeah, he really, really does want to go through. And that's basically what they're testing him on. Like, they're throwing that out there to see, like, how much do you really want to close this? Oh, you're not willing to say that you'll close it at this price regardless of lender performance. Now I'm a little bit worried. From Elon's perspective, I don't think that he wants to give that up because I think that he has obligations to a lot of people that he's raised money from, and he doesn't want to basically dilute the potential value that other investors have committed at. And he specifically probably doesn't want to sell more shares in Tesla since he's told people that he was not going to do that. And so it's a bad look for him. Hey, I'm done selling. Oh, wait a second. Now I do have to sell a couple more $1 billion worth of shares to close this deal. So I think it really is important to Elon to keep his word, if at all possible. It may not be possible, but I don't think he wants to sell any more shares to close this deal specifically because he said he was not going to. But, if I'm Twitter and I'm looking at it, I'd be skeptical. Like, I don't know if you really want to close this deal or not. This has kind of been a crap show.
Yeah. Go ahead, Richard.
Yeah, I was going to say, and it's also kind of governed, I think, by Twitter's attorneys, because I think they're in a tight position too. If they tell their client to affirm the deal as is, and the deal goes south because the financing part goes south, I think Twitter's going to go back to their attorneys. If the court orders the transaction closed on the terms as is, then the kind of attorneys are out of the picture, in my mind. And it might be partly governed by the risk aversion by the attorneys. And that's why, you heard, yes, I think there were a bunch of comments on Twitter, they won't accept a yes for an answer. That there was some, Elon, I think, said that yesterday. And so that's what occurs to me is maybe the attorney, and it's a big firm. There are big firms involved. They have, obviously, there's a huge potential exposure if they goof. So it might be the case that they all feel safe if the judge just issues the order, and whatever happens after that. But everybody is kind of indemnified in a way that way.
So, Richard, what do you, as far as the butt covering desire by the board, like how much of this is them, like if they don't get this deal to close at 54.20, I think they're going to get sued like from here to kingdom come, right? So
yeah.
How much of this is just risk aversion by the board? Like we really need to absolutely 100% ensure that it closes at 54.20 just so that we can minimize our litigation.
Yeah, in part it is, but there is some number at which because their counsel is going to tell them you're going to have X percent that you're going to lose this case. Might be 12%, 15%, and it's all kind of like guesswork, but you can kind of give an estimate. So there is some number that you could sell as being a reasonable number with, considering all risks. But yeah, but to a large extent, if the deal's closed, then the board has kind of done what they said they did. And if there's negative ramifications afterwards that they have to chase Elon because of the issue of the debt financing or whatever, that's kind of like outside of their control. But yeah, I agree. I think that is a way of the board kind of insulating themselves.
Well, and one more thought on the back and forth so far, depending on how much of a discount Twitter gave Elon to take the dependence on the debt financing going through, like they may have been willing to discount the entire deal by the amount that was being debt financed. And if he said no to that, like I definitely understand, like that's kind of a red flag if you're sitting in Twitter's position.
Yeah, I don't think they did because I think that the debt part was 13 billion, something on 13 to 15, something like that.
Okay, so it's more than it's like 30% or something of the
deal.
Yeah,
something. Yeah, and that's the point. The discount he asked for was 30%. So maybe Elon was, and I think that makes sense. I think Elon would rather not be attached to lenders. He'd rather have this deal on his own. So if he could get the deal on his own and not have any lenders attached, that would be kind of the perfect position. And what I was going to say is there probably is some point between 30% and 10% where Elon would waive that condition, where he thought it was cheap enough and he could figure out a way of making it work and he had enough money. The other thing I was going to say is, and we kind of talked about this earlier, and I thought I was a little concerned about this. Gary Black, and this is my interpretation of his comments, but Gary Black kind of suggested that Elon did need to raise some additional capital and kind of he was concerned he might do kind of a pump and dump. And that the reason why there was an announcement yesterday that the semi was in production and was going to be sent to Pepsi, I think, December 1st. And he was concerned that timing was not coincidental and it was part of the process to raise the price of the stock up through earnings date, which I think is the 19th, and that the 28th, the date that we had spoken about earlier, was a quote unquote a closing date for the Twitter transaction. So if it was theoretically a closing date, he would have like 9 days to make a sale at a higher price and raise the difference. And if that's what happened, that would be really troubling for me.
So if this did go to court, I guess sticking back just a little bit, and then I can come back to Gary's comments. If this did go to court, is it possible that the judge could say, yes, Twitter, you need to accept the offer sans debt financing at whatever he can produce, whether it's 40, whatever the 30% off is, somewhere in the neighborhood of 30 billion instead of 44?
Yes, the judge could. I just don't think that the judge would, because that would penalize Twitter. I just don't think the judge, if the judge kind of, in essence, is going to favor Twitter, I think the judge will try to make sure they get full value.
But that might be the best outcome for the Twitter shareholders. Like, as far as the amount of money, they may end up being made the most whole, if at all possible, at that point in time. But does the judge care about the shareholders, or do they care about the corporation, I guess, or is there any distinction?
In this case, I don't think there will be a distinction. I think the judge will be trying to protect, the corporation, but the individual shareholders are the ones who have the most to lose in this particular case. I was going to say one other point. There is no date that this transaction has to close by. So I know there was a reference to October 28th, but that's just merely as to the date when the judge will set a trial date in November. And typically what happens, and to be honest, I would not expect them to settle this without having the hammer of the trial over their head. So they may be in negotiations through the 28th, but in most cases, and it's possible it may resolve by the 28th, but most cases I've been in, you don't. And it's much closer to the end when you have that greater urgency. And it doesn't seem like Elon is in any hurry to close this or, conclude this. So I'm expecting that if it's settled, it would be after the 28th and before the trial date. And yes, the judge would probably be pissed, but so be it. But the judge won't reject an agreement after October 28th. I think that's kind of how it was portrayed, like a deal had to be done by a particular date. That's just not the case.
Got it. Are you both familiar with All In podcast? I think, Hans, you are. Richard, do you know All In podcast? Have you heard of that?
I have not.
Okay, so it's just a bunch of like 4 billionaires sit together and talk about a bunch of stuff. And I think last night Oliver mentioned this in the comments. Looks like Chamath explained this on All In podcast last night. It's not so much about the Twitter, the price of Twitter, and Chamath is somebody who's, he was the SPAC king and all that stuff. So he's been part of a lot of these different things. I pulled up the video. It's the Twitter segment's about 14 minutes long. It dropped about 7 hours ago. Would you guys be willing to just listen to at least part of it and react to it? Are you guys comfortable with that?
Yeah, put it on like 1.5 speed, and then it'll only take us 10 minutes.
Perfect. Look at that. We're so smart. All right, so let me. Okay,
but we'll have to apologize for the people who listen to this in the future on 2x speed, because that gets a little bit crazy.
It's gonna be real fast. How about this? I'll start at 1.25, and then we'll take it from there. How does that sound? So we don't make sure people ears don't. So if y'all don't mind, go on mute so that we don't get double echo, and then take notes or whatever you'd like. And here we go.
Reported that Elon contacted Twitter's board and suggested that they move forward with closing the transaction at the original terms and the original purchase price of $54.20 a share. In the couple of days since then, and even as of right now, with some news reports coming out here on Thursday morning, it appears that there are still some question marks around whether or not the deal is actually going to move forward at $54.20 a share, because Elon, as of right now, the report said, is still asking for a financing contingency in order to close. And there's a lot of back and forth on what the terms are. Meanwhile, the court case in Delaware is continuing forward on whether or not Elon breached his terms of the original agreement to close and buy Twitter at $54.20. As we know, leading up to the signed deal or post signing the deal, Elon put together a financing syndicate, a combination of debt investors as well as equity co-investors with him to do the purchase of Twitter at $54.20 a share. So the 40 some odd billion dollars of capital that's needed was committed by a set of investors that were going to invest debt and equity. And there's a big question mark now on whether or not those investors want to or would still consummate the transaction with Elon, given how the markets have turned and given how debt markets are trading and equity markets are trading. So Chamath, I'd love to hear your point of view on what hurdles does Elon still have in front of him? Does he still want to get this done? And is there still a financing syndicate that's standing behind him at the original purchase price to get it done?
It's a great question. Maybe the best way to start is, Nick, do you want to queue up what I said in August 25th? The lawsuit really boils down to one very specific clause, which is the pinnacle question at hand, which is there is a specific performance clause that Elon signed up to, right? Which, his lawyers could have struck out and either chose not to or, couldn't get the deal done without. And that specific performance clause says that Twitter can't force him to close at $54.20 a share. And I think the issue at hand at the Delaware Business Court is going to be that, because Twitter is going to point to all of these, gotchas and disclaimers that they have around this bot issue as their cover story. And I think that really, this kind of, again, builds more and more momentum in my mind that the most likely outcome here is a settlement where you have to pay the economic difference between where the stock is now and $54.20, which is more than $1 billion, or you close at some number below $54.20 a share. And I think that is like, if you had to be a betting person, that's probably, and if you look at the way the stock is traded, and if you also look at the way the options market trades, that's what people are assuming, that there's a $7 to $10 billion swing. And if you impute that into the stock price, you kind of get into the $51 a share kind of an acquisition price. Again, I'm not saying that is right or should be right. That's just sort of what the market says. Yeah, so it turns out that, sort of like that kind of guesstimate turned out to be pretty accurate because the stock today is at $51 a share. So I think that the specific performance thing is exactly what this thing has always hinged on. And I think that there was a realization that there were very few outs around how that contractual term was written and agreed to. So there is an out in the contract. And that out says that I think it's by April. If the deal doesn't get done by April, then the banks can walk away from their commitment to fund the debt. And if the banks walk away, then Elon does have a financing contingency that allows him to walk away. So the actual set of events that have to happen is those two things specifically. Get to April so the banks can pass and say, we've changed our mind, market conditions are different. And then Elon is able to say, oh, the banks just walked away. Right now, the banks, if you look at all of the debt that they've committed to, well, they committed at a point in time when the debt markets were much better than they are today. In the last 6 or 7 months since they agreed to do this, the debt markets have been clobbered. And specifically junk bonds and a bunch of junk bond debt, the yields that you have to pay, so the price to get that kind of debt has skyrocketed. So roughly back of the envelope math would tell me that right now the banks are offside between $1 and $2 billion because they're not going to be able to sell this debt to anybody else. So I think the banks obviously want a way out. The problem is their only way out is to run the shot clock off until April. So I think that's the dance that they're in right now. Elon's trying to find a way to solve, for the merger. I think Twitter's going to say, we're not going to give you a financing contingency. You have to bring the banks in and close right now. And then we will not go to court. Otherwise, we're going to court. And so I think it's a very delicate predicament that they're all in. But my estimate is that the equity is probably 20% offside. So it's not a huge thing. He can make that up because he can create equity value like nobody's business. The debt is way offside by a couple $1 billion, which is hard to make back. But I think in the end, given enough time, they can probably make that back. The best off in all of this are the Twitter shareholders. They're getting an enormous premium to what that company is worth today in the open market. And so I think this deal is going to close. It's probably going to close in the next few weeks. And had you bought Twitter when we were talking about it in August, you would have made 25% in 6 weeks. And, if the deal closed at 54, you would have made, a third of your money in 8 weeks, which is, very hard to do in a market.
If you're a GP at one of the funds like Andreessen or Sequoia, and you had made this commitment to Elon or even Larry Ellison a couple months ago, do you fight against closing at 54.20? Do you stick with the deal and support him? I mean, what do you do given that the premium is so much higher than where the market would trade it at today? Some people are saying the stock should be at like $20 a share or something.
The average premium in an M&A transaction in the public markets is about 30%. So, and I think the fair value of Twitter is around $32 to $35 a share. So, it's not like he is massively, massively overpaying. And so, I would just sort of keep that in the realm of the possible. So like if you take $35 as the midpoint, fair value is really $45.50. So yeah, he paid 20% more than he should have, but he didn't pay 100% more. So it's not as if you can't make that equity back as a private company, particularly because there's probably $10 of fat in the stock if you think about just OpEx.
Right.
In terms of all the buildings they have, maybe they don't need as many employees, maybe they revisit salaries. One thing is when I looked at doing an activist play at Twitter, I think I mentioned this 5 or 6 years ago, one of the things that I found was at that time, Twitter was running their own data centers. And the most obvious thing for me at that time was like, we're going to move everything to AWS. Now, I don't know if that happened, but I'm sure that if it hasn't, just bidding that out to Azure, GCP, and AWS can raise, $3 or $4 billion because I'm sure those companies would want this kind of an app on their cloud. So there's all kinds of things that I think Elon can do as a private company to make back maybe the small bit that he overpaid. And then he can get to the core job of rebuilding this company to be usable, or this product to be usable. Because look, I'll just speak as a user right now. It has been decaying at a very, very rapid clip. And I think that his trepidation in closing the merger, in part also, even though he hasn't said it, has to do with the quality of the experience. It's just degraded. It's not as fun to use as it was during the pandemic, or even before the pandemic. So something is happening inside that app that needs to get fixed. And if he does it, he'll make a ton of money.
Sort of like what happened with Friendster and MySpace and any social networking app over time, the quality degrades. If it's not growing, it's shrinking, and it gets.
If it's not growing, and also if the product hygiene isn't enforced in code, and product hygiene in this case are the spam, bots, the trolling, it can really take away from the experience.
Yeah. I mean, interestingly, like if you think back to the starting days, the original days of Twitter, I don't know if you guys remember, you would send in an SMS to do your tweet, and then it would post up, and other people would get the SMS notification, and it would crash all the time. And the app was notoriously crashing. It was poorly architected at the beginning, and some people have argued that Twitter has had a cultural technical incompetence from the earliest days.
I think that's a little harsh. So I do think, look, Twitter was known for what's called a fail whale. They used to have these fail whales constantly, and they did hire people that attempted to try to fix it. I remember the funniest part of when I went in there and said, hey, here's my plan and here's what I want to do, is literally a day or two later, the head of engineering quit. I can't remember who his name was, but he was just out the door. But I think it is a team that has tried its best, that probably at the edges definitely made some technical miscalculations. Like I said, at that time, the idea that any app of that scale would use their own data centers made no technical sense whatsoever. It made the app laggy. It made it hard to use. It made it more prone to downtime, to your point. But that being said, I would be shocked if they haven't made meaningful improvements, because the stack of the internet has gotten so much better over the last 7 years. And so, to your point, David, if they didn't take advantage of all these new abstractions and mechanisms to rebuild the app, or to rebuild search, or to rebuild how all these infrastructure elements of the app work, I would be really surprised, because then what are they doing over there?
Yeah. Well, look, I mean, to the point earlier, besides the product points, there was a really good tweet I liked that said, for what it's worth, I think Elon will show us just how lean the Silicon Valley advertising companies can be run. At the very least, it'll be an interesting thought experiment for spectators.
Is that a good enough place to kick off the discussion? Or you guys want to keep listening?
That's enough.
Yeah, I'm good.
I think Chamath watched our first 30 minutes.
In the past.
Yeah, in the past.
Yeah. So I kind of give my initial takeaways. I think you both are quite a bit more well-versed in this realm than I am. But my takeaway seems like, if for whatever reason, we talked about this already, I think. So this is kind of like, it was kind of cool that we had a little bit of overlap of thought between the two. Oh, by the way, for those that don't know what we just played, I definitely want to give a shout out to this. This was a clip from the All In podcast. All In podcast, you can find that on YouTube. It's a great podcast. Highly recommended. If you don't know what it is, please go check it out. All In podcast. So what it seems like is, just from that conversation, Twitter shareholders will win regardless of what happens, as long as the deal closes or doesn't close, because someone's going to have to pay the difference of what happened, right? If the deal closes, they get paid. If it doesn't close, then Elon is very likely to lose a trial that says that he has to cover the damages he has caused by walking away from the deal. So cool. So one party is already forcing Twitter, should be forcing, well, I guess they don't really care what happens because they're going to get paid regardless. So really it comes down to, are the lenders willing to move forward with the deal in the current market conditions versus essentially forcing Elon to drag this out to April of 2023 so he can walk away. And then the equation turns to, how badly does Elon want this platform, and if he wants it really badly, and if lenders are saying, you know what, I'm not really sure, let's wait until April, he could just very well say, well, screw you, I'm just going to do it myself, and then move forward and try to work with Twitter to make that happen, right? And this is kind of like what we've talked about as well. What was your takeaways from the discussion?
I guess I did have one question that came up during the discussion, and that is, how much does Twitter not agreeing to, because basically, Elon said, I'll perform the deal just under the original stipulations that we began with. So if Twitter does let this go to court and doesn't accept that deal, how much ammunition does that give Elon's side in the case to say, they were fine with this when we began the deal. The fact that they're not closing kind of nullifies the benefit that they might have had going into the trial if I hadn't offered at full price.
I think that's why they said yesterday that they contacted a lender and the lender hadn't even heard from Elon. So they're going to say that his proposal to close a deal is bullshit because he's not in a position to close a deal. And as a result, we couldn't accept it. So we had to get the court's order. And I was going to say is, in response to what you said, Farzad, about the shareholders being taken care of, there is a circumstance where maybe they're not. So there obviously is a diminution value of the company if the deal doesn't close, but I don't know if it's all attributable to Elon, because there's one whistleblower and maybe the allegations of the whistleblower decreased the value 5%. Apparently there's a second whistleblower who has additional allegations unrelated to the first whistleblower, and that might have some value in the diminution. The market itself might play in some factor. So, I'm making up numbers, but let's say it's gone down by 20%. Maybe Elon's 50% responsible. So in that case, the shareholders would not get 54.20. They might get 44.20 or whatever. So I don't think there's certainty in any, again, it's because it's an equitable action and it gives the judge more discretion to kind of shape the remedy. I think there's a lot of uncertainty. And I think that's what makes all the lawyers uncomfortable.
Okay. Go ahead, Hans.
So then, to move on to the second half of the discussion where Chamath was talking about, okay, so if Elon does have the company, like how much room is there to recreate value out of Twitter? And I think that, Twitter is a great example. And this was one of the things that was just registering as I was listening to it, of just how hard it is to get a premium software product on the market, that you really need the best of the best of the best engineers. And unfortunately, the maybe counterintuitive thing about it is, and that's all you need. You don't need an army of B engineers. You need 50 A++ engineers. And you cannot, with a bunch of money, throw a million B engineers at a product and compete with 100 A++ engineers. And so that's what's going to happen and it'll be a tumultuous thing. I really liked the guy from TED, Chris. He had a little thread on how he expects all of this to play out, assuming that Elon closes the deal. And I think he's exactly right. I think that, if Elon gets in there, he slashes the cost structure of this business down to nothing. And then we'll see, Matt's assessment of just how efficient Tesla is with their R&D. How incredible is what they've been able to accomplish with FSD at Tesla based on the amount of R&D spend that they have. Like, it's just insanely efficient. And so if he can assemble a team inside of Twitter, which I know that Gary doesn't think that he can do, but to me, it's obvious that he can do. Not only is he an engineer, it's like people just forget that he already did this with PayPal. Like, he hand coded X.com himself. It's not like he doesn't understand how to create software products that people love and create massive amounts of value, both in private and public companies. And so I absolutely think that he can assemble a team at Twitter of some incredible engineers. In fact, he probably already has at least special ops group of the people that he's going to deploy ready to go. They're kind of working on some solutions, and then as soon as the deal closes, they're going to hit the ground running. And then it'll be a process of culling a whole bunch of employees and programs and things that are just not necessary. They have seen exponential growth in revenue, but the problem with Twitter is that their exponential cost structure outpaced their exponential revenue growth. Right. And so there's just so much fat in this company. And then, as users, we all know that the platform is just a tiny fraction of what it could be. And that's just if Twitter was what Twitter could be. Now, if you say, okay, stop thinking about Twitter as what Twitter is. Let's start thinking about Twitter as just a different starting point for the X app. And that product is probably 10 times more valuable than the best version of Twitter that we wish Twitter was today. And so, I think there's a incredible amount of upside in this deal. I would totally invest in it. I think, if I could buy into the private deal at 54.20, I would expect in 10 years to probably at least 20x my money.
Yeah. Go ahead, Richard.
I was going to say, Chamath said that, and this was the number we came up with for a different reason, but he said like $46 a share would have been a fair deal. And that's kind of the number we threw out, I think, last week or the week before. And in terms of the efficiency, Matt was mentioning, and these are rough numbers, but I think the R&D for Tesla was something on the order of either 2.5 or 2.9 billion, and Meta in doing their conversion to the metaverse,
29,
which apparently is not done yet. Yeah, it was like 29, like 10 times the cost. And at the same time their cost went up, their revenue is kind of like stagnated. So and Tesla's the reverse, right? At the same time they're improving, their revenue's going up. That the correct direction. The other thing that Hans mentioned about the X app, which I thought was interesting, and there's nothing specific or concrete about it, but I saw references to including Starlink and Tesla and SpaceX, and I know Dave Lee, I believe, was a big proponent of that, having like basically a holding company of all the various entities. And I don't know if I'd really be in favor of that. And I know this is a kind of a pun. I understand the upside, but SpaceX is problematic, I believe, because all you need is basically one event. And, if you run it long enough, there'll be an event. If you do it long enough, it's run by humans, at least now. There'll be some mistake and some event. And that will be a giant liability, and it'll be a liability on everything. So I like the idea of the app, like in the idea of like a PayPal app that does many things. And I think they compared it like Tencent was a comparison.
WeChat.
Yeah, WeChat. I like that idea, but I don't like the idea of Tesla being tied to SpaceX. That's my
I don't think it will be at this point. I think his comments at AI Day 2 about how it's good that Tesla is a public company and Tesla is probably the one that will make progress towards AGI, that I think in his mind now that what Tesla is doing is always going to be its own silo, and that there's not going to be any commingling of that with other things for that specific reason.
Yeah, I would love to invest in SpaceX, but kind of as a spec investment and on its own. And if it goes south, if it goes south, then so be it. But because obviously if SpaceX is a huge success, that's going to be worth trillions of dollars.
Yeah.
So
there was Hans, you mentioned the Chris Anderson thread. I do want to read through it because it is quite, it's a very interesting insight into how different ways are thinking about this Twitter thing closing. We're talking about X a little bit. Real quick, somebody asked what type of event that would happen. I mean, I think the obvious one here is, God forbid, something happens with the astronauts going to space and it's a failed mission and they die. That would be catastrophic to not just those people and their families, but anything that's related to that sort of event. If it's under one umbrella and Tesla's part of that X thing and SpaceX part of that X thing, X becomes significantly less valuable because of something like that happening. So that's the sort of event. I think that's what you're assuming, right, Richard? That's the sort of thing.
Yeah. And I think the person asked about insurance. Yes, you can insure it, but if you're insuring like $1 trillion loss, the premium is going to be astronomical anyway. And on top of that, it doesn't make a difference if it's insured. It's the impact to the company. If you have a accident, people are going to flee from the stock. That's just what's going to happen.
Yeah.
So that's it, even.
Well, and it's also going to massively slow down whatever your plans are. So before the event, there's going to be an expectation of future results that's not going to really have that priced in, and then that's going to happen. It's going to slow everything down, and that's going to have an incredible impact on the business's ability just to operate on the same plans and timeframes that they were before. And it could really be a massive just deterrent and slow down the human expansion into space. And so, really, on a whole number of fronts, just hope that we never see that.
Yeah, for sure.
Plus, there's no guarantee that anybody will write insurance. There's some risk that they don't write insurance for. And what happens if Elon has to be self-insured? So he's at risk. That's a big risk, to be at risk. California, in Southern California, we're in fire country, and Malibu is a really nice place, except to get fire insurance in Malibu is really difficult. So there are a lot of homeowners in Malibu who have no fire insurance, and they're kind of betting that they escape fires while they live there.
Risky business. Let me go ahead and read through this thread real quick, because there's some pretty eye-opening sort of, at least from what I remember reading the thread. This is Chris Anderson on Twitter, Ted Chris. Sort of talking about X and Twitter within that context. Amidst all the sneering, I'd like to offer a prediction for how the Elon Musk acquisition of Twitter will play out. First of all, I think the deal will indeed go through now. This was on October 5th when this was tweeted out, so 2 days ago. Backed by an impressive roster of co-investors. Next, the company will undoubtedly experience a period of significant turmoil. There's a lot of change ahead. Many won't like it, but it will gradually become clear that a lot of the changes are actually quite exciting. First of all, fears of all content moderation being abandoned will prove unfounded. Instead, the algorithm will be adjusted to avoid giving so much amplification to political divisiveness. The debate that matters is not about who is on or off the platform, but what type of tweets get amplified. If that can change, everything changes. Next, steps will be put in place to verify all human Twitter accounts. That process will lay the basis for those accounts to be used for transactions a la WeChat using a Twitter crypto coin or USD. For example, people may be offered paid subscriptions and receive usable tokens. This could bring the company significant revenue, plus create its own economy on which goods and services can be transacted. The sheer scale of Twitter can rapidly bring this to critical mass. So this is sort of like it's not really required to be on ad revenue necessarily. They can use different ways of raise money for the company. About a year from now, growing numbers of people will be attracted to Twitter and X. /X, it will be far less prone to robo-spam and algorithm fuel outrage. Instead, it will offer lots of new functionality. There's plenty Elon Musk can be legitimately criticized for. His own use of Twitter can seem ill-advised. He can give the impression of being more political than he is, and there's no question there will be many bumps along the way, but this is the key point. As a tech entrepreneur, he is without peer. In 2013, I predicted he could become the world's richest man within a decade, check, so on and so forth. Fixing Twitter may be as hard a job as converting Teslas into robotaxis and proving the viability of a monster rocket capable of taking humanity to Mars. But within 3 years from now, I predict he will be have accomplished in all three. So what's interesting about this thread, not investment advice, obviously. So what's interesting about this thread, this is somebody who has interviewed Elon multiple times on the TED stage, somebody that I really haven't seen him talk about other, I guess, founders in this way. So it's interesting to get his viewpoint. And there seems to be this sort of starting to become I'm seeing more voices that are coming through and saying, hey, we think that if Elon does indeed end up with Twitter or some sort of X platform, it will become a force to be reckoned with, and it will be something that's going to materially change how people transact, how people communicate with each other. The thing that I'm most curious about is how it's going to change the landscape of media. So what is the next generation of media? That's going to be very fascinating to watch, especially now that I'm I guess part of the media in some way, and I'm a content creator. Like what am I in for with this thing, and how can I use the platform to bring good, right, to move society forward? So that's extremely exciting to think about. What kind of thoughts go through your heads? I know, Hans, you kind of started down this path, but what sort of things come up?
So first, the other comment that Chris basically gets to interview any founder that he wants ever. He's talked to an incredible number of incredible people. And so, his bologna sauce filter and his assessment of who the best tech entrepreneurs are is definitely up there. It's probably top 0.1% of people in their ability to evaluate that. So, I think that is meaningful to take into account here. Second of all, I think we also can't underestimate the preference falsification that goes on in Silicon Valley. So that's people.
What do you mean by preference
publicly
falsification?
saying that they support the current thing, whatever the current thing is, but privately thinking that it's crazy, and not just crazy, but batshit crazy, but they can't say that. And so there is probably an undercurrent of a lot more support for Elon lopping the head off of this particular crazy ass instantiation of tech than anyone will see coming, because no one is publicly willing to admit that they want to see this deal go through. They want to see the changes to Twitter. They don't want to have all this political outrage fueling everything. And so, from that standpoint, I view it as highly likely that he will be able to assemble a group of investors to make sure this deal closes, to be able to fix the things that need to be fixed, just on that point alone. So,
yeah, which kind of was reinforced by those tweets or those texts being released for the court proceedings. There were a lot of people that were like, yo, let me hop on this train with you, which was fascinating.
Conspiracy, or not conspiracy, but just, I would love, for the sake of irony, it would be amazing if the PayPal mafia reassembled to do this deal and then build what PayPal was supposed to be, even though at the time they didn't all want that to, it was all of that disagreement about what PayPal should be that got Elon ousted as CEO in the first place. So yeah, if they all came back in now and helped do this deal and let him run with it the way that he wants to, and give him, just think about the culture today and how founder friendly it is compared to 2000. And I think a lot of people, I wonder how much Elon's is it just a symbol of the time that he was not allowed to continue on with his plans as the CEO, and now it's a different time and so he could? Or how much was his ouster kind of something that actually catalyzed change in the Silicon Valley VC culture and tilted things in the favor of founders? Or was that just simply, hey, basically a product of the free money that founders became more powerful because there were more, it was a founder's market, that there was so much money chasing after opportunities that it didn't matter how good of a founder you were or how good at executing you were. And so there were a lot more founders who were all getting funded. And so VCs then had to become more founder friendly in order to win deals. That's probably more likely, but I just think it's interesting to think about, if Elon were to found PayPal today, he would have been given a lot more freedom than he was back in the late 90s, early 2000s.
That's a great point. Just for those that are not familiar, I pulled up the list of members on the PayPal Mafia. So folks like Peter Thiel, Elon Musk, obviously. We have David Sachs. We have, there was another person here who, Steve Chen, co-founded YouTube. So if you look through this list, these are very, very, very impressive people that have a lot of money now. So it's a fascinating thought.
Yeah, full disclosure, I'm not related to Reid Hoffman.
Okay. Let's make sure that's the case. Yeah. What do you think, Richard? What kind of goes through your head?
Yeah. So first, the shocking change is going to be Herbert Diess is going to be the new CEO of Twitter. It's shocking. Shocking. Well, I was wondering who he would make. I don't think Elon would run it day to day. So would somebody like Jack Dorsey be, or is Elon pissed at Dorsey? Because obviously Elon had conversation, or I don't know. Obviously, it seems like Elon did discuss the Twitter deal with Dorsey. If Dorsey was 100% forthright, about what was going on, fine. But it's possible he wasn't, and they may not be as good a terms as they were. But Dorsey and Elon seem to be aligned at least one point in time, and maybe that's somebody who would be in a position to run Twitter. I don't know, like a day-to-day. And maybe Twitter will acquire Palantir and Square to get the whole gang together. But my biggest concern about Twitter, I have no concern that Elon will find out a way to monetize it and commercialize it, because he's a brilliant guy and he has that skill set. I don't think he has any special, maybe as an engineer in, as to SpaceX, he really does have a special talent. I don't know if his talent in social media is such a great expertise that it puts him above anybody else. And maybe it would be better served if he wasn't actively involved in the day-to-day operations of Twitter. But my greatest concern is to the extent it would take away his time. If he's basically going to build a new company, and I know he's amazing in terms of his ability to work, but you only still have so many hours. So that's my concern. If he can, set up the basic the plan and have others execute it, that's great. But if he has to spend too much time in resurrecting the platform, I'm not sure. I have some concern that it might take away time from Tesla. And I don't know, in order of him personally, whether Mars is more important for him than Tesla. I don't know. I don't really know the order of his. I understand, his environmental concerns and concerns for his planet, but I think for himself, his ending place is not this planet. So I don't know if he has to spend more time in another endeavor that is kind of collateral to Mars, but doesn't push it forward, if he'd be interested in that.
So I think it signals a shift in his time frame that he views existential risk over, that I think Tesla and SpaceX, those are mid to long-term existential risk plays. And the X app is a much more immediate existential risk play. And I think he's feeling a lot like the present risk of something really bad happening to humanity is dramatically increasing. And that's why he's shifting or starting to give a little bit more focus to something that's here and now, much more than something that's going to play out over the next few decades. And I mean, that's one portion of the whole deal. I lost that. There was another point that I was going to follow.
No, you're fine.
But I lost it.
I think what's the one interesting thing you brought up, Richard, is there might be a situation where Elon being part of the Twitter build out could risk other companies or his ability to execute in certain situations. I don't think Elon would have even thought about taking on Twitter unless that bandwidth was available in the first place. So the way I think about it is the time spent on Twitter is not time he would have spent at Tesla. is that it's time that Elon has allocated to something else other than his current things, because let's make sure we're understanding this point. Like Tesla and SpaceX do not exist right now unless Elon has delegated 99.9999% of the things that runs the company, right? So the assumption here is that in my head is that these companies are already where they need to be from the standpoint of Elon being able to take other things. Yes, is Elon doing a lot more than other CEOs would in that role? 100%, probably like 100x times more actual influence in the company from a design perspective. But it goes from 0.0001% of the work to 0.001% of the work, right? So it's still a gigantic amount of work is being done outside of his scope. So I don't necessarily think that him taking on Twitter in any way, shape, or form is going to really damage the other companies. But what it will happen, I think what will happen is that there will be a team that's assigned to run the day-to-day of Twitter, and Elon sort of becomes this, maybe a more traditional CEO in that respect. Like, this is where we need to go. I've built out this network. I have these teams. I have these folks that trust my vision. I'm going to give you the tools to succeed. Let me know what you need from me. But otherwise, I'm going to hold you accountable to extremely tight deadlines, and you better innovate in this space as quickly as humanly possible.
Yeah. So or at least my speculation as far as where that time is coming from, he thinks that FSD and the Starship, like I think he anticipates Starship is getting to orbit this year. Yeah. And he anticipates FSD beta wide release this year. And then he thinks that the follow-on to that is that he's not going to be spending as much time on either of those two projects. And so this is kind of a forward-looking, I see some time that is opening. And he probably has more time now already. I mean, it seems like his mental state has been better apart from the whole Twitter deal. So I think he has a little bit more time now, and then he's seeing more time opening up in the not too distant future on those two fronts. And that's where he's anticipating that that's going to come.
Yeah, I think somebody who openly came out and said doesn't like exercise and like he likes eating burgers and now he's making time to actually get in better shape tells me that he's got more mental capacity to do things that he doesn't want to do necessarily, but he's doing it because he knows he has. So he has more time, and he has and he's obviously in a much more relaxed state, which to me, like the craziest thing for me, and again, I don't necessarily idolize Elon Musk, but I do view him as very inspirational in some things. But the thing that blows my mind constantly is that this guy can look so relaxed, and he's running Tesla, SpaceX, and is dealing with this Twitter thing, and he's just chatting and laughing, and at the AI day too, looks like he's just having a good time. I'm like, bro, like how have you created that separation of like real life stress versus you living as a human being? Like something has happened in his brain that he's been able to just now absorb, quote unquote, what we would reference as incredible amounts of pain. He has now just, I don't know, he's siloed that somewhere else and is no longer pain. It's just, this is what it means to be alive. This is just what it means to be a human being. And he's just accepted that. And I don't know, it's like a fascinating look into human psychology for me. Like I wish we could cut open his brain and see how the hell he's processing this stuff,
Yeah, well, I think he's mastered the ability of basically things that he's not capable of controlling, he completely discards and has no anxiety related to it. On the flip side, he works his ass off. So he does everything he can. So if you do everything you can and you have no anxiety about the stuff that you can't do, then you are, and plus he's a brilliant guy and has command over, all these subject matters. So he's not feeling at a loss. But if you're able to kind of discard the stuff you can't control, that makes you like a unique human being. Because that's the things that people hang on to stuff. That's what makes them unhappy. And he, again, I think it goes with the fact that he works his ass off. It lets him do that.
I think that Elon is somewhat unique in the Silicon Valley tech culture in his appreciation of the value of pain. And I think this is something that you would have experienced definitely, Farzad. Like, if you went to work at Google or Facebook or Twitter or any number of Silicon Valley companies, they want to make the entire experience of working for them as positive and rainbowy as possible. And you need an extra 2 weeks to finish this assignment. Okay, I think that sounds reasonable. Mental health,
which is important.
I want to live in that world. Like, I don't want to feel pain all the time. But when it comes to actually moving the ball forward for humanity, doesn't cut it. You need deadlines, you need pain, you need expectations. And I know, like, Elon doesn't talk about his childhood, but I can guarantee you that Elon suffered a tremendous amount of personal pain in his childhood that gave him a much higher than average pain tolerance, but potentially even appreciation for the value of pain. And I think this is one of the things that he has built into everything that he does is you have to have that pull. You have to have that thing that's crazy inspiring to run towards. And you also have to have a freaking wolf behind you chasing your butt to get you running at maximum speed. And you need both of those things. And that, so I guess that also plays into how he's able to get so much out of such a small team of exceptionally talented, and maybe it's not even exceptionally talented, maybe it's just exceptionally performing engineers or product people. You could have the exact same A++ engineers that I referenced earlier working at Facebook or Google or whatever. And if they don't have the wolf behind them, you're still not getting the same product out.
Yeah, very true.
I was going to say, as a lawyer, I can identify with that because I have deadlines, and people hate deadlines because they don't like the pressure of the deadline. But a deadline is a gift because it forces you to do something by an X date. And I was thinking about this. Unlike most people, where deadline, even with Elon, right? He may say December 2022, and it could be December 2024 theoretically. But in my world, right? In my world, if it's due Friday, it's due Friday. And I have there's no out. There's no, I can do it Saturday. And, but after a while, you become accustomed to that too. And the original stress of kind of having to comply with that, you kind of embrace it in some way. It keeps you organized. It keeps you kind of directed and driven. And it makes you much more productive. That's for sure.
Yeah, it's Tim Urban's panic monster. So instead of a wolf, we'll put the panic monster in the back.
Someone just came to a realization you're a lawyer. He hasn't billed me for this podcast yet. Don't worry, guys. He's a good lawyer.
Not yet.
Not yet. There you go. That's so funny. Yeah, it's a fascinating thing to think about. We've spent the last hour and 7 minutes on this Twitter X thing, and I feel like we can go for another hour on this topic, but maybe let's hit Tesla Semi a little bit. I know there was news around that being released, talking about hitting deadlines. December 1st, Tesla is set to ship the first batch of Tesla Semis to Pepsi. What are your takeaways from these news? And I'll pull up the tweet while I start going. Do you guys have any thoughts around Tesla Semi finally hitting the roads?
Do you have anything you want to hop in with, Richard?
I'll let you take it first.
So the first thing that I thought when I saw it is not surprised. I was telling the guys earlier, I really anticipated that we were going to see Semi, potentially even Roadster, get announced here soon. We got news earlier, a couple months ago, that Tesla no longer feels cell constrained. And the only thing holding back Semi production has been cell constraints. And so basically the writing was on the wall once that comment was made that we were going to see the Semi start getting delivered. The Roadster, I don't know whether we'll see that. I think my personal estimate would be 60-40, yes, that we'll see a Roadster get delivered in the next quarter. Or, potentially by the end of Q1. For the same reasons. And then, that'll be really exciting to have, I loved Rob's comments on those last night that it's just, this is a new platform for Tesla and it opens up a whole thing. I think at this point, it's something that Wall Street has completely forgotten about and hasn't been modeling. And so now the Gary Blacks of the world who are show me, don't tell me, are going to see deliveries. They'll have some data to point to. It'll be something that they can build into their estimates of the future. But it's especially exciting to see Semi rolling out with the hopefully impending increased functionality of FSD. Like, if I'm a truck driver and I can reduce the number of incidents that my vehicle is in, regardless of fuel efficiency, regardless of load capacity, like if I can reduce my insurance overhead because there are fewer accidents, like that is also a huge knock on. And then also, just like it's a lot easier to hire a truck driver for a truck that is a lot easier to drive. So I think there's a number of knock-on positive effects that just make Semi a no-brainer for a lot of people. It will be really interesting to see what the actual pricing ends up being, because I doubt that it's going to be sold for the price that was originally released at. But I'm incredibly excited. The other thing is just thinking back to ARK Invest, they had created a lot of modeling around expecting a lot of train transport in the far future when we have basically an entire national fleet of pure BEV trucking, that it will, and especially if it becomes robotaxi trucking, that it will decrease the cost per mile of transport below rail. And so you can see a lot more point-to-point transportation of goods and services, which will definitely create a strain on the road infrastructure. But yeah, it's just an exciting future that we get to witness beginning to unfold this year now.
What do you think, Richard?
Yeah, I saw, I think it was on Yashu's channel. He had Meyer on, I forgot the gentleman's last name, and he was talking about it. And he was talking about relative that he thought that the Semi was the means to autonomous. That was the first means that Tesla should go for autonomous vehicles. And it's basically set up that way because those semis are on the highway most of the way, and you can basically do autopilot on the highway, or means you can basically do it on the highway. The only issue is to the point of destination. And I don't know if he was suggesting it or I heard it somewhere else. Maybe you could use a bot. You'd have a bot placed on the off ramp, and the bot would do it the last 3 miles, or you'd have a truck driver bringing it the last few miles. But he thought that was the best way. He thought it was more important than the Cybertruck, getting the Semi out. The question, and I think as Hans mentioned, is the what they're going to charge. And I think they had spoken about like 150, 180,000 was the original price. But in the same discussion, he was thinking that because you could replace drivers, you could operate 24 hours a day, et cetera, that you might be able to charge 750, 800,000 for a single unit. And when you're at those numbers, you can imagine what the margins would be at those numbers. The question I have is, because I know this transaction, the one to Pepsi, has been pending for quite some time. So my interest is the number of vehicles that are being delivered. If it's 5, that's wonderful. If it's 50, that's better. And if it's 500, that's, great. But if it's just in a de minimis amount, that's a good start, but it's not material. So I'd like to see what the numbers are.
Go ahead, Hans.
What are your thoughts, Richard, on the regulatory environment? Like, how far are we away from the government being okay with autonomous trucking, even if it is just on the high? Like, it's one thing to have an advanced driver assist system. I just can't imagine states being okay with robo trucks anytime soon.
Yeah, well, I think the states will do, state by state until there's a federal regulation. The government might try to block a state from asserting their own regulation, because a truck might go across state lines and they might say it might affect interstate commerce. And if it affects interstate commerce, then that's subject to federal regulatory control. I think, the problem we might have is the oil lobby at some point in time will not be happy if electric trucks are taking over the roadways. And they do have some influence lobbying. So I would think the regulatory issues will be the biggest obstacle. is getting enough congressmen to be on the side of moving forward and not being influenced by the oil industry. And, that's going to probably make things slower, certainly in Oklahoma and those kind of, even Texas, right? There could be resistance. I would expect some resistance. And in terms of national regulatory control, the government moves very slowly. And that seems like a very complex issue with a lot of variables. And I worry that Elon doesn't piss off too many people. It would be much better.
Good luck with that.
Yeah, I know. Well, it would be much better if he had a regular, and maybe he does, but has somebody like regulatory officer, and they're responsible for dealing with the government, and they have a one-on-one relationship, and he kind of stays away from those areas. That's kind of also, my concern is like when you have the richest guy in the world, who does he have to account to, in the end? And I love him and he's great, but I wish I would prefer if he had somebody to account to, that he would have to kind of reflect, even though I'm sure he believes whatever he's doing is in the best interest of society and the world, etc. I'm sure of that. But I think sometimes it's not a bad if you have to account to somebody else and you will take their opinions and actually take action on their opinions. And I wonder sometimes he might be a little bit too rigid as to that.
You're on mute, Farzad.
Look at me. I'm so good at this. Thank you.
But your voice sounded great.
Oh, thank you. The jokester. I love it. So while you guys were sharing your thoughts, I whipped up a quick model on Excel. So one of the questions was, okay, so how many units do we think Semi is going to be able to sell here? So very, very quickly, very, not financial advice. I'm a moron. Do not listen to this, but I'm going to show you anyway. So let's say in 2023, they're able to sell 100 units of Semi. You guys at any point tell me where you think I'm off base, if I should go higher or lower, because this is kind of like a exercise for those that might be thinking about what is Semi's impact to Tesla's financials potentially from this PepsiCo thing. So let's say in 2023, they're able to sell 100 Semis, ASP of 200,000, because what we talked about before, when Semi was unveiled initially, it was between 150 to 180 for the lower base, but inflation, blah, 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 a bunch of stuff has happened. Pepsi's likely to purchase so Elon said 500-mile range, and I'm guessing that's 500-mile at fully load. So that's likely to be the higher trim. Let's just assume conservatively ASP is 200,000. Let's say they're selling it at 40% margin because
I'll stop you there.
Yeah, please.
So, won't there be like lower margins as we ramp up? So I would expect
sure,
the margins kind of go up as we are able to kind of
let's say zero. So what margin do you think they can make at 1,000 semis? Like what kind of like how many semis do you think Tesla's going to sell at full ramp? Right? Did they ever share that number? And anybody in the comments, if y'all have any thoughts, do share, because this is like sort of an altogether exercise.
I'm thinking from an economies of scale point, you don't actually get to a positive gross margin until somewhere around 10,000. You probably don't get good margins until you're selling at least 50,000 a year.
So let's see how many semi trucks are sold each year. This is going to be a good one. Estimated heavy truck duty sales between 2019 and 2021. So in 2021, 1.9 million trucks were sold in worldwide. Okay. So let's. How many of those are sold in the U.S.? Can we figure that out somehow? Do we want to assume like 20%? Is that a fair assumption, you think? 20%?
I would guess it's more, because we have a lot larger. First of all, we have a lot higher GDP, but also a larger landmass, and so we have a lot more transport happening here than a lot of other places.
Let's go 35%. So 35% of 1.9 million. So 1900000. Oops. 1900000 times
700,000. No, it's about 700,000.
Yep. And so, and how many semi manufacturers are there in the United States? How many semi manufacturers in the US? Let's see. By the way, when I go through my modeling exercise, this is the kind of stuff that I do. And I've already done this for the semi in my model, but I want to go through it once more so everybody can see live how.
And you don't care in this case whether it's an electric manufacturer or a legacy manufacturer?
No, because what I'm trying to get to is like what is a steady state level of production for a semi manufacturer, period. And that kind of gives me an idea what that's when full margins come to bore. You know what I'm saying? So there are many 18-wheeler truck manufacturers in the US, and every trucking company has a trucker has their favorite. Okay, that doesn't tell me how many. If anybody knows how many semi manufacturers are in the US, that would be very, very helpful. Okay, there are nearly 2 million semi trucks in operation in the US, but that's the fleet though, I believe. That's probably the fleet. Okay, who is the biggest truck manufacturer in the US? Freightliner is the largest truck manufacturer. Okay, so how many semis did Freightliner make a year? Perfect. There we go. Okay, there we go. Oh, perfect. Perfect. So in 2020, there were a total of, okay, so we're way, I'm guessing the United States. Perfect. Okay. So in 2020, let's use 2019 because 2020 was the COVID. 2019, there were 270, roughly, call it 260,000 semis sold. Okay. So we were way over. 260,000 semis sold. Okay. So, and Freightliner was the largest one at 100,000 per year.
I think those are the big Class 8 trucks, but that is what we care about. So I think the other number included a lot of smaller trucks.
Makes sense. Perfect. So 100,000 per. So can we assume that that Tesla will reach quote unquote market dominance when it comes to how many semis they sell per year, like they have in the EV market? Do you think that's a fair assumption that eventually Tesla will get to 100,000 semis per year? Is that fair? Nods. Yeah. Okay. So 100,000 is 100% margin essentially. Let's think about it that way. So how long do you think it's going to take Tesla to reach 100,000 units per year? What kind of ramp? Like 5 years? 6 years ish? Something like that? I'm going to say 5 years.
I think longer.
Yeah. Let's take it to 2030 then. How about that?
It's a lot of cells is the thing. It's not a lot of units, but it's a lot of cells.
Okay. So let's say 2030. If you just joined us on the live stream, we're doing a live model of the semi. So 100,000. Let me go ahead and now you can look at my not very great Excel skills, just somewhat average. I'm just going to keep it at 200,000 here, and then we'll change it. So we'll change it. So in the chat, do drop in your recommendations of what these numbers you think they should be. Let's go currency. Perfect. So then let's say, I don't know, let's say 0.8. So let's say maybe the ramp is a little bit slower than a car. It seems a little aggressive. Something like that. Is that too aggressive, y'all think? 2024, they'll do about 17,000 semis. What do you guys think? It's just, this is how modeling works in a way, just a rough one.
I thought the 100 to 17,000 is too big a jump.
70,000 to 100,000 is too large?
I think they'll do more than 100 though in 2023. Yeah, I'd say, if we get 1,000 in 2023.
Okay.
I'd say
we'll probably get like 10 next year or this year, hopefully.
Right. So let's say like,
I'd say 12,500 year that 2024.
Okay. Then 23,000 2025. Is that fair? Because that's kind of the S curve, right? We started hitting the S curve a little bit, and we start writing it up. Okay. So ASP of 200,000 conservatively. Do we think 40% margin is realistic at full bore? Should be, right?
Yeah,
for sure. Okay. So if they sell 100,000 semis at an ASP of 200,000 per unit, a margin of 40% without any FSD, that's $8 billion in gross profit. Okay. If they say add FSD, let's just say $15,000 per truck. I'm just using that as a price now. We can kind of talk through the methodology there. The gross profit from FSD will be 1.5 billion because it's basically 100% profit because it's software. That's how I think about it.
Are you assuming basically 100% take rate too?
Yes. Yeah.
Okay.
I don't think they buy the semi unless this thing's going to drive itself eventually. Because what the hell is the point of buying it in the first place?
Yeah, I agree.
Is that fair?
Yeah.
Okay. So then the total gross profit is $9.5 billion, which essentially falls to the bottom line because of Tesla's operational leverage, right? So the margin they would earn from the truck should fall directly to the bottom line before taxes, right? If we add a PE multiple of, say, 20 on that $9.5 billion of gross profit, this is without taxes hitting the line, right? And the taxes will obviously bring this number down, but a 20 PE would add about $190 billion to the market cap. A 50 PE would add roughly 475 billion to the market cap, and 100 PE would add about $1 trillion to the market cap. So 100 semis sold per year, which is equal to the largest semi manufacturer in the U.S. The largest semi manufacturer in the U.S. right now, Freightliner, Class A truck, 2019 volumes was 100,000 per year, which is pre-COVID. I think that's a safe assumption to make, especially as we're going towards more e-commerce. There's going to be more semis. So if we assume that Tesla gets as big as Freightliner, they are asking about $200,000 per unit, sell at a 40% margin, and they add on $15,000 of FSD on top of the truck, they'll add $9.5 billion of profit to their bottom line. Okay, what do you guys want to change about this?
I would just say on the demand side of things, people who might be skeptical of their ability to sell 100,000 in the year 2030, governments are basically going to mandate, if the supply is there, that people are buying these electric trucks because it's a huge carbon emission source. So yeah, like if they can produce 100,000 in 2030, they will 100% sell them.
Okay.
How about
Let me read through some of the comments. Richard, go ahead. Yeah, share your thoughts.
I was going to say, how about if you reduce the numbers by, let's say, 10%, but increase the ASP to 300,000?
Sure. So 990,000 here, right?
Yeah.
And then this is 300,000 instead?
Correct. Because I think the price is going to be higher than the 200,000.
Yeah, so it will actually end up adding here. Let me actually put a side by side here. So let's do this guy.
Yeah, can we ramp the price up over time?
Sure. So this is one model. So let's take this guy here. So this will be 90,000 ramping here, but 300,000 instead, right? So that's what it looks like. So let's say it starts at 200,000 and I don't know. So it's probably not going to be, no. Something like that.
Okay.
Right? Makes sense?
Yes.
So instead of getting to 100,000, we're saying we're going to do 10% less in volume, but we're going to be selling it at 300,000 instead of 200,000 at 40% margin. You end up adding $12 billion to the bottom line instead of $8 billion. So 50% more. Yeah. What other, so, and there was somebody in the comments that said that they think 40% margin is too high. I don't know. I don't know if I agree with that because these vehicles, you think about the 4680 is going to be a very efficient platform, and then you're utilizing a lot of parts that you already have in your supply chain to build this out. So a lot of Model 3 parts are going into this thing, as Elon stated previously when they were making this thing. So, and typically, let me just do a Google search and see how much a semi truck usually makes in margin. Go ahead, Hans. I think you were going to say something.
Yeah, I was curious about that same thing. Like, what are Freightliner's gross margins? But when you think about that, on a $200,000 vehicle, that's a cost of production of $120,000. So I'm pretty sure that Tesla can produce that for less than $120,000. Like that's the sale price of a Model X.
Right. Some commercial vehicle profit margin. Let's see what they say here. And that's the one thing to like, this is where a lot of I don't know if any of y'all have been in a semi truck before, but these are a conglomeration of a bunch of it's just random pieces thrown together to make this thing happen. There's not much vertical integration in making a semi truck. There's like probably the least amount of vertical integration I've ever seen in any vehicle ever. So the opportunity for margin in this industry is gigantic, at least I believe. Let's see, gross margin, commercial vehicle. Yeah, so I don't know if this is necessarily a good barometer, but it's kind of tough to see. But anyway, okay.
Does Freightliner have an electric division?
Does Freightliner have EV trucks? Oh, there we go. Freightliner. Oh, look at that. Well, where'd they go? Okay. Cascadia and the EM2. On highway, 320 to 470 horsepower, 155, 220, or 2030 typical range. So about half of the Tesla Semi. 80% and 90-minute recharge. And then the EM2 is 230 target range. I love how they just all have blue lines because they really want to make it obvious it's electric, y'all. 80% in 90 minutes.
I love how they don't care about aerodynamics. Yeah, the same trucks that we've been making for the last 30 years. That's
Is there a
exactly
price?
what we need.
Is there a price on these?
Let's see.
I'll get a
By
quote.
the way, thank you for everybody who has joined us on this live stream. Really appreciate. No, they're not being open about. No. So I'm gonna guess they have some sort of premium. So this is their Cascadia. I'm guessing this is their Big Daddy. Look at how old this thing looks, and they have it being sold as new. Like, it tells you just how much innovation is going into the space with the Semi, right? Like this is literally something they're looking to sell right now, and this is what it looks like. Let's see how much this thing this thing costs. Build a Cascadia. Hell yeah. You guys want to build a Cascadia? Let's see. We're going to do a 126-inch day cab, which is going to be the largest one. I can literally buy a Semi right now. Let's make it, I don't know, let's just go.
Red.
Okay. There. Look at that. Looks hot. Materials. I'm just going to leave it. I'm just going to leave all this stuff. Get a quote. Oh my God. Okay. All right. So you have to sort of, okay. So I don't see anything that would tell us how much this thing costs in person. Does anybody know how much this truck costs, y'all? In the comments? Somebody said you should compare to Volvo trucks. Okay. Let's try that. Volvo semi truck. Volvo trucks for sale. Perfect. Shop Volvo trucks inventory. Perfect. So what we got? Okay, cool. Well, these are used, but these things typically run for millions of miles. So what's this guy? I'm trying to find something that would be in the realm of the price of the Semi and see if that would be, let's go from most expensive to least. 174,000 is the most expensive. How can I sort by, here, I'll do that. Okay, what's this guy? So this one's got 223,000 miles. 174,000. Let's see what kind of stats it's got. It's got air ride suspension, which I'm sure the Semi has. It's got a sleeper, which is like this is where people can sleep back here for those that are not familiar. It is used, so it's not new. It's a tandem axle, which I'm guessing it's the double wheel thing back there. Does it say how much it can haul? It's got to be 80,000 pounds, right? It has to be. Okay. So, yeah. So a used Volvo of similar specs to the Tesla Semi sells for about $174,000, which would make sense that the Tesla Semi brand new is probably closer to 200 to 250,000 based on this, without sort of like with similar specs. Is that a fair statement? You guys think?
I was going to say, but this is not electric, so that's
It is not electric, so there might be an additional premium.
Yeah, I would think. Plus, the 223,000 miles got to have some value also.
For sure. Some sort of depreciation. I mean, these things hold their value extremely well because they have a gigantic amount of utility. But I guess the thought process is that, okay, so to me, my takeaway here is that anywhere between 200 and 300,000 is a realistic price for minimum 200,000. Minimum 200,000 is what I'm arriving at. So this is a very conservative
we see that
price.
with EVs, that the total cost of ownership is usually lower than gas, but a higher percentage of that is in the upfront cost. And so you should expect the initial sale price to be higher on an EV just from that factor alone.
Yeah.
And I was going to say, and just again, because it's electric, it should last a lot longer than the gas-powered one. So it should have a longer life.
Yep. Okay.
And believe me, fleet operators are thinking in terms of total cost of ownership. They don't care.
100%. 100%. Yeah, because you think about if you're a fleet operator and you're spending how much on diesel, right? So what's it? Diesel, how big is a Class 8 truck gas tank?
No,
150
the real question
gallons.
is, what's the gas mileage that they get? It's really low.
I think like 4 miles per gallon, something like that.
Yeah.
You're 100% right. What's the, come on, typical Class 8 truck miles per gallon? 5.2. And so how much is diesel per gallon? So 5.2.
320.
Cost, I think it's way more than that.
What did you say? 320?
Way more
You're
than that.
obviously not in California.
No, this is Texas.
Oh.
We actually have decent prices.
Let's say $4. Our current average, 4.43. Okay. So $4.43 per gallon, 5.2 miles per gallon, and then average Class 8 truck miles per year. 62,700. Seems low, but let's see, 62,700. Okay, so we're gonna do 62,700 miles. We get 5.2 miles per gallon, so it's 12,000 gallons at $4.43 per gallon. So the average truck's expenditure on just fuel is $53,000 per truck per year. And so electricity costs are roughly going to be what? Let's just conservatively say 1/3. Is that a fair number? 1/3 the cost of diesel?
I think we can back into it. Just say, basically a megawatt hour is the pack, and it has 500 miles of range.
Mm-hmm.
And so you can figure out how many watts of power that we need.
Okay, so help me with that. So 500 miles per range. What's the efficiency on? So how big of a
megawatt
pack?
hour is 1,000 kilowatt hours.
Mm-hmm. And then how big is going to be the pack?
So you basically got 2 kilowatts per mile there?
2 kilowatts per mile. Yep. And so, what's the average cost of a kilowatt?
That's a great Google question.
13 cents. $0.13.
So even if we said it was 30 cents a mile, and then multiply your 30 cents times your, it's
30
a lot
cents
less.
times 2, right? Times the miles, right?
Sorry, I was saying 13 cents times 2 is 26, so I was rounding up to 30 cents per mile.
Okay, got it. So we'll do 13 cents times 2 kilowatts per mile times 62,000 miles, right?
Yep.
$16,000. So you
like
would
less than a quarter.
$37,000 saved in energy costs per truck. So you could theoretically bake this into the price. of the truck, because then the assumption is you would save a ton of money from everything else from operation, right? Safety,
Yeah, that doesn't even
maintenance.
factor in maintenance, which is a huge expense on these trucks.
Yeah.
Wouldn't you save more? Because that one you looked at, that Volvo truck you looked at, was a 2022, 223,000 miles on it. And I think you calculated 67,000 miles on it.
Yeah.
So, you're probably going to run them as much as you can.
It depends. So the ones that have the high mileage, those are doing your long distance routes. There's a lot of trucks that do like more local delivery type stuff. And they're running a specific route that it takes them a lot of time, but it's not necessarily that far in distance. And so I think that's why you're seeing the average on the mileage be in that 60,000-ish range. It's just a variety of different use cases for that size truck that are not all doing overland routes.
Tires, tubes, liners, and valves is by far the biggest cost of semi truck. So tires will be the same, but tubes, liners, and valves will be not, I don't think, applicable. Preventative would go away as well.
They should be the same.
You think so?
Mm-hmm. Yeah, I would be shocked if Tesla did not use the exact same tires, tubes, and like all the infrastructure is there. You just use normal trucking tires. So is this all tire related though? Tire, tubes, liners, and this is just all tire. Okay, sorry, excuse me. Got it. So 12% goes away. Brakes should go away too because of regen, right? Theoretically, in some form. Expendable items should go away. Exhaust system goes away. Fuel system goes away. That remains. Okay, so roughly 50% of your maintenance costs go away. Is that a fair statement? Okay. Average cost of maintenance on a semi truck. Just give me a freaking number. $15,000 per year. Okay, so $7,000 of maintenance costs per year. And life, so what's life of semi truck? 10 to 15 years. So $70,000 saved over the course of the semi. So
I think we'll be on the high side because it's electric, it should last on the higher side.
Yeah, it should go 20 miles. It should be go 20 years instead of 10 years. Okay. So at least call it $100,000 saved per year conservatively from the maintenance perspective over the life of the semi truck.
we do have to factor in battery life. Whatever we can't basically go beyond, I don't know, 750,000 miles. So that's a little over 10 years. At 62, that's like 12 years.
I mean, unless Tesla figures out how to have a battery that lasts significantly longer than that,
structural. Right? Yeah, it'll be a structural battery pack. There will be no battery swap. The battery will die and you'll recycle the thing.
Okay. But
or
so I guess
use it for shorter routes. And I guess that is a real possibility that you change the application from a longer distance. Like if you're only using, say you've got 75% of your initial battery capacity, and you just put it on a lower distance route where it still works fine. So
makes sense.
I guess potentially it could extend it.
There's still a ton of utility for the vehicle, even in a like dead battery scenario, that's what you would call it. Okay, perfect. Okay, so then I think the price of $200,000 to $300,000 per semi per year is I think that's super valid, especially over time. 90,000 units sold per year would be close to or at the biggest semi truck manufacturer in the United States today. 40% margin, I think. Go ahead, Hans.
I was just going to say, we'll be, at that point in time, we'll be trying to convert an entire fleet of gas trucks into electric trucks. And the demand will literally be infinite.
Yes.
Yeah, I think that one of those documents you reviewed that said there was 2 million of those trucks on the road currently. Not that they were sold, but 2 million. So you got to replace them.
Oh, yeah, sure. The fleet.
Yeah, you got to replace the entire fleet.
Yeah. Absolutely. Okay. Very cool. All right. So, and then 40% margin, we all feel like is a legitimate number for this thing because it's going to be the thought process here is that the legacy semi truck business is a gigantic mess just by looking at what was that one new truck that looked like it was built in 1950? The assumption here is that these things can be built much more vertically and much more efficiently, especially with Tesla's manufacturing prowess. So I feel comfortable. Let's just go like this. Minus 20, 0, 10, 20, 30, 35, 38. Let's just use that as a ramp. So I do think 40% more.
Even if that was generous, which I don't think it is, the way that you have FSD priced is ridiculously generous.
You know what? I agree.
Ridiculously conservative. They'll probably make, the biggest expense aside from fuel and trucking is the driver. And so if at any point along that path you eliminate the need for a driver, it's like an order of magnitude increase on the value of the vehicle.
Mm-hmm. Somebody said I would not add anything for FSD before 2026. Okay, that's okay. I don't mind doing that. But then, Richard said, but I would start
from
FSD
0 to infinite.
Yeah. So, do you think 50,000 per for FSD for a semi is legitimate? It has to be, right? Because if you don't need a driver,
like $70,000 a year, and that's for one truck driver. And some of these trucks are running multiple drivers.
Yeah, team trucks. Yep. But those team trucks, they make up but they make up the price anyway. That's the fleet owner makes up the price on that. Okay, so I think 50,000 is a very conservative number then, right? Is that a fair number? That's less than 1 year's worth of pay. Okay. I don't know, 40, 30, 20. Why wouldn't it be here? Because by here it should be solved, right? Okay, big numbers. Big numbers. So 90,000 semi-sold per year, 300,000 ASP, 40% margin. That's $10 billion of gross profit per year. Then you add full self-driving ASP at 50,000 per truck, 100% take rate. That's an additional $4.5 billion to the bottom line, totaling at $15 billion of gross profit per year. If you assume no tax hit from earnings for that part of the business, at a PE of 20, that's $306 billion of market cap. PE 50 is $765 billion. PE of 100, $1.5 trillion. So I think this is... Go ahead.
Yeah, and I was going to say, if I'm buying a fleet of trucks and I'm buying it for the FSD on the come, I am going to buy it down. So I'm not going to wait till it's 50 grand. If I think it's coming and I'm buying the trucks,
oh sure,
I'll spend 20 for 3 years for nothing. I will do that. I'll save me money in the back end.
Yeah. I do want to give a shout out to somebody, by the way. They just joined the channel. Joseph, thank you very much, my friend. Check your messages. There should be a link to our private Discord. Thank you very much for joining us, my friend. Really appreciate it. So what else can we turn around with this truck thing? I think to me, it seems like long-term, the semi could very well add at least $300 billion of market cap to the company if this model works out. Is that a fair statement?
Yes.
Okay.
Yeah, and a lot of that, of course, hinges on FSD, but I do think Mayor Thacker is right that it should be, it's a very high value added vertical to get FSD working on. And a lot of it really is simpler. And that's, even if they did one driver, there's the whole platoon trucking idea. And so even if you had an actual driver and then a platoon of robo semis behind them, following them to the destination, that's fairly feasible from a software standpoint. But yeah, like a lot of this value does depend on FSD. And so like if you wanted to model it and say, okay, we're just going to take FSD revenue out, it's a lot lower. A large portion of almost a third of that revenue is that 50,000 100% take rate. So
yeah. Makes sense.
But I also believe that the sale price will be much higher. I know, especially down the road in 2030, 2029, because I just think there's be so much utility and value to the trucking companies that it still will be a great value for them.
Yeah, I think the total net cost of say $350,000 per truck does seem quite conservative long term if you can solve FSD. Like it seems, but it also could mean that, hey, listen, like we've commoditized a lot of this labor, so that's why everything is an age of abundance. It's because trucking is way cheaper now. That could be another variable too, right? So it's interesting. So I would say 300 billion of market cap added to the company within the context of today's world of we're still going to value labor quite expensively in some realms, I think makes sense. But if we go towards the age of abundance, it could just be $1 billion. But all of us can afford everything because everything is plentiful, right? So there's a lot of variables there.
I would think the PE ratio of 20 is pretty low too, because it's going to be way, it would make the PEG ratio too great or too low, I guess.
This will be a company that's building bots by this time as well, right? Yeah, freaking weird.
Which I have a different take on than other people. If we want to go to that,
let's close it with that. We have let's see if we can keep it to 2 hours. If not, that's fine too. But bot and investment grade, if you want to throw that in there. But Alexander did such a great job covering that yesterday with many people. But let's give us your take on the bot.
So specifically on, a lot of people are worried about job displacement by bot and how that's going to be so problematic. And unless Tesla can literally perform some sort of a miracle in their ability to ramp up to absolutely insane levels of production, I really don't see, like, even we'll just posit a world where a bot can do anything a human can do as far as boring, repetitive labor, all the types of jobs that make $20 an hour or less. There are literally billions of people doing those jobs right now. And as we're ramping production of bot, it'll start out at 10 and then 100 and then 1,000. Like, it's going to be a number of years before we're turning out on the order of 100,000 bots a year, 500,000 bots a year, 1 million bots a year. And we literally have billions of people doing the types of jobs that make less than $20 an hour doing manual labor. And I think that we'll transition, that transition will basically be slow enough. And the other thing that you have to think of is that there's an elasticity of demand. I think the bot will be able to be very profitable, even doing jobs that humans normally do for, say, $5 an hour. And so what if you could quadruple the number of market participants that can do $5 an hour work? Like, there's a huge demand for work and business models that are functional based on that labor cost that don't work today because you can't get anyone to do those jobs. And so I think that the elasticity of demand for the low price labor that bot will be able to produce will create an entirely new set of businesses that don't actually eat away any existing jobs necessarily, that they're all additive to global GDP and they're not subtractive, and we're not going to be taking any major amount of jobs away from other people for a long time, and probably for so long, in fact, that the amount of political pain that we feel from automation by bots of all of our jobs will be a lot lower than everyone anticipates at this point in time, because we just kind of make the logical leap to, like, it'll be possible eventually. Yes, we'll have incredible amount of bots who can do an incredible amount of work, and we will find ourselves asking, okay, what the heck do we do as people? But the length of time between now and then is a lot longer than people are realizing, just from a manufacturing standpoint. Like, this is not software. You can't press a button and replicate it infinitely. It is subject to the laws of scaling based on physical stuff production. And that's a whole different scaling architecture than software. And so I think a lot of people are basically thinking of this using their mental models for how software scales, and it's not necessarily transferable. So anyways, that's my kind of counter point to a lot of the things that I've been seeing, reading, hearing.
I appreciate that. So the ramp towards the eventuality of bots being able to do all physical labor will be so long that it will, if there needs to be a transition away from humans doing those physical jobs into something else that gets created from the creation of the bot existing, that window of time is going to be additive to GDP and additive to how many jobs humans can partake on versus it actually being disruptive and being it taking away jobs or displacing jobs. Is that a good summary of how I'm thinking about that? Okay.
Yeah, and it's going to just enable a bunch of new types of businesses that don't have viable cost structures currently.
Yeah, I think, and I'm starting to fall in that camp as well, because initially, I mean, you've heard me talk very, like I've been concerned about how quickly it could displace. I do think that now my mentality is starting to shift towards the quickness of it, to it ensuring that it falls in the correct hands, so that the labor that gets generated from these bots is as universal and democratized as possible. I think is sort of what my head goes to, because what I don't want to happen, and you guys tell me how unlikely this is that it falls within the hands of folks that are looking to use the bot for their own gain, and they essentially automate away or generate value for themselves, and then only very few people have access to the plentiness that these bots create, and it creates a giant a furthering gap between the haves and the have-nots, right? And so it sounds like a very unlikely scenario, especially if Tesla and a company that Elon Musk has described as what's the word he used, that it's philanthropic in nature in a way. It's unlikely for that to happen. I get it, but what if Elon's not around in 10 years time or 20 years time, and by then bots at full scale, but then there's like, you know what, this would be great for our investors if we shift strategy to this, and then it's just a super drive to reducing costs, but only very few people get to benefit those reduced costs and the value that the bots create, right?
Yeah,
does that make sense?
Yeah, that makes perfect sense. And the Tesla, what you're alluding to here is Tesla will have a lot of power in the ability to determine who can do what with what.
Right.
The way that they, potentially they don't sell the bots. Potentially there's only subscriptions. And hey, you're not abiding by our subscription terms of use, and we feel like whatever you're doing is basically net negative for humanity. Then bye-bye, we revoke your subscription, your bot doesn't work anymore. So it really depends on how they decide to structure their business model around bots. And I think, for a long time, hopefully Elon's around for as long as possible to shape whatever that is, because I think he will do the best job of preventing it from having unintended negative consequences.
Yeah.
I was going to say, at least over the last few years, we've had a decrease in the labor force. So maybe that will be a ongoing thing. And as the labor force decreases, the kind of the strain on replacing the labor force with an autonomous labor force, maybe that will be less of a strain, just because it'll happen more in a kind of a natural way. I do think, though, that people might get displaced, because in the past that's what happened, but they find new avenues to go into, and people are resistant. I mean, people are resistant to change. That's kind of how it is. So people are reluctant, and eventually they figure out when things are better for them, they accept it, but there usually is resistance. And I was going to say is, I think, and I don't know how long this is going to take. I agree with Hans. It may be, such a long period that we're talking about a problem that may not be to the extent we think it is, but I think it will provide avenues for people to leave the planet. That people will have opportunities that they'll want to, shoot for bigger things. But most importantly, in my mind, it'll let people explore the ocean. Because, I always think it's fantastic that we know a lot more about space than we know about our own undersea. And I think, especially with bots, I think that would be like a useful use of them. But I think that will permit people to explore all avenues of the planet. And the ocean is the part that is the least explored and probably offers the most promise to us.
Fascinating.
Yeah, and Richard's point about, SpaceX is going to be a huge buyer of these bots. And so if Elon wants 1 million people on Mars, well, maybe with bot, it's not 1 million people. Maybe it's 250,000 people and 750,000 bots. That's a lot of bots.
Yeah.
Yeah, I was going to say, without Elon's mission to Mars, I don't think the bots are in play. I think that's a part of his mission to Mars. And without them, it would make it much more difficult, if not impossible. I'm just, of course, speculating, of course.
I wanted to hit on Jay Lizard's comment. This is not Rob Mauer's new haircut. This is Rob Mauer's old haircut. Finally, we have it back.
It's facts. That's actually real facts. I find it fascinating that he had a brand new haircut at AI Day 2. I don't want to speculate, but I find that very fascinating.
I recognized it immediately. I was like, hallelujah.
Yeah. I kind of like this long hair look too.
And obviously the Tesla bot was made with the representation of Rob. Obviously,
of course. Of course. Yeah. All right. Well, we're at 2 hours. Do we want to hit investment grade maybe for a few seconds? What do you all think? I think there's implications long term for this upgrade to really maximize the number of funds and people that can invest in Tesla, especially long term. So that's nothing but a positive, right? So what do you guys think about that?
I know this is something that a lot of people have been beating the drum on for a long time. It's not just Alexandra, but she's definitely taken the bull by the horns. And I think a lot of her pestering of the people and her connections to the people that make the decisions was really impactful. And
I love she will be like very proud of the word pestering too.
Yes, she will be. And so huge props to her in basically helping to accelerate this. Hopefully, maybe she didn't have any influence over the timeline. Maybe it was still going to happen, but I think there's definitely a better than 50% chance that her pestering helped to accelerate this. It's a great thing as far as institutional investors being able to have access to it. It kind of makes me sad to think about all the pension funds and retirement funds that have had zero Tesla exposure, as it's performed just incredibly well, simply because, well, there's this rule about if their debt is not rated investment grade, then you can't invest in their stock, which is funky, but the way that the whole gated institutional system works. But yeah, great that now those fund managers can allocate some to Tesla if they would like to. I think there will be some that will. Kind of remains to be seen how positively this will impact the stock. And I doubt we'll ever really be able to, I guess we will be able to see if institutional participation starts to grow in relationship to retail. We'll see how many funds move in. And you would expect that to grow as the company grows and stabilizes. But it's hard for them to wrap their mind around a business that's still growing so rapidly. So, a lot of times these pension funds are going to wait until they have something that's more like Coke, where you can pretty much predict it 100 years into the future. Yeah.
That's a good point.
I wanted to thank Tesla BBB Mama for her efforts, and it's appreciated. And obviously, if we hadn't got the upgrade, the stock would have been down.
Of course, obviously.
Okay. And I'm sure we will get when things kind of stabilize and everything gets back to normal. I'm sure we will get the benefit of the additional investment, from all the institutions.
Yeah. It cannot be understated just how much of a factor macro is having right now on everything. I mean, it is quite brutal out there. Let's close out the stream on a really good note. Tesla is down 6%. How about that? Isn't that amazing?
I just want to point out Farzad's trolliness. Obviously, don't look at the stock. Here, I'm going to show you the stock since you're watching my stream.
Sorry, I don't know. I do
I
like
think
to
the problem
troll it.
is
It's fun.
Yashu is still sitting on Tesla is the problem.
I think that's the problem. He needs to stand up from Tesla once in a while, let it actually rise up a little bit.
Yeah.
If you do follow me on Twitter, I'm sorry, I do troll a lot, and I don't know, it's just fun for me. But what a discussion, you guys! I think this was super fun, very in depth. I think we've covered. My goal with these things was to be able to take a topic and just drill in incredibly deeply and really understand what are the core things that are driving that topic and what are the things that can be dissected. So I really want to thank you both for being part of that discussion. I think we've done a really good job today to do that for the audience, and thank you so much for the support of the channel, and obviously everybody who's been watching and reading through with us. I think I'm eternally grateful for all of you. I do hope this is valuable for the community, and I think it's valuable as well to create some, get some things marinating in your brain to try and figure out, okay, where's this thing going that we're talking about? What are the likely outcomes? How should I think about it? Test my thesis, test our thesis. I think it's an important place for ideas and thoughts to be thrown around without judgment, without any sort of like negative or positive implications. We'll just take them as they are, analyze them, and try to move forward from there. So thank you both very much for being part of this weird experiment we're doing right now. But I do think it's turning out to be quite valuable for me at the very least, and I hope it's valuable for others as well. So thank you both very much. Yeah.
And I just want to get on the public record that Richard has been a great source on the whole Twitter fiasco, that I feel like I have a better understanding of what's really going on from him than even Gary Black or, a lot of the people who are prognosticating online. So,
yeah. Thank you, Richard.
Well, thank you. And I enjoy participating, and I learn a lot from both you guys, a lot more than I know. So I appreciate
Likewise.
it. And again, part of this is teaching civil discussion. So if we have differences, to have a civil discussion. And I think that, especially nowadays, that's really important.
Yes, I agree with that 100%. And what I love about these is the civil discussion. It's so effortless in these forums, at least what I'm noticing, because of you guys, because of everybody who's been taking part of this and really almost taking that to heart and driving that forward as well. So yeah, it's been just such a joy. Like I look forward to Fridays because I'm like, man, I can't wait to sit down with the community and like drill a topic down into its bones. And some people might find it boring or kind of like, why are you just focusing on this one thing? But like, that's what it takes to really understand what the hell's going on. We got to freaking dig deep and see what's going on. So anyway, I won't keep you guys anymore out there watching us. Thank you all very much. Happy Friday. Tesla is in the stock market. Have a great weekend, everybody. We'll see you around and broadcast. Here we go.